Good day, grade 12s. So today we will be looking at opening concepts, basically. We will be outlining the accounting equation, we will be outlining general ledger accounts. We will be outlining your final accounts. We will also be outlining your GAAP principles. So for today, it's just an introduction. It's an introduction tutorial. We will just be going through basic concepts before we touch base with questions and answers. And here we go. So to start off today, we are going to be looking at your GAAP principles. Now, what is GAAP? You should know this already. You've been doing this for the past 3 years. GAAP is your generally accepted accounting principles. Now, what are those principles? It's principles that govern how financial statements within a company are set. Now, remember that we are looking at companies this year. In grade 11, you looked at partnerships. In grade 10, you looked at sole trader, sole proprietor. But now we're looking at GAAP principles amongst companies, and they are still the same from grade 10 and grade 11. It is still the same principles. Now, what do GAAP principles do? They govern how financial statements are set. Now, we have 5 principles that govern how our financial statements are set. We have principle number 1, going concern. What does going concern say? It says that financial statements have to be prepared under the assumption that the company will operate in the future. First principle. Second principle is historical cost. What does historical cost say? It says that all assets recorded at original cost price, the cost price should be the purchase price. So what you actually paid is what is going to be the cost price. That is what historical cost basically says. We also have materiality. What does materiality say? It says that all important or material items should be recorded separately. Why should they be recorded separately? Because they are material items. It means they are big numbers. They are big numbers, huge expenditures or huge incomes. Huge expenditures such as your director's fees. After that, we move on to prudence. What does prudence basically say? It says that we should not over or understate our assets, liabilities, or owner's equity. It really just wants all items to be recorded correctly at the correct price. And the last one, it's matching. What does matching really say? What do you match? Income should go to income, and expenditure should go to expenses. You shouldn't cross or mix between income and expenses and income. An income item should go to income, and an expense item should go to an expense. That summarizes everything about our GAAP principles. Moving on. Now, the most important foundation of everything we do in accounting is our accounting equation. Something that you learned from EMS or even grade 10. Moving on to our accounting. Our accounting equation. What does the accounting equation state? Again, it says that your assets are equal to your owner's equity plus your liabilities. Now I want to detail the most important accounts that you are going to face throughout the whole of this year. The most important accounts. We're going to differentiate all our items today. We're going to differentiate between assets, owners' equities, and liabilities. In assets, we have non-current assets and we have current assets. In owner's equity, we have expenses and income. In liabilities, we have non-current liabilities and we have current liabilities. What are the most important non-current assets that you're going to see? It is your land and buildings. I'm just going to write it in short form, but when you're writing your tests and exams, you're supposed to write the whole name. We have land and buildings. We have your vehicles. We have, I think those are the two big ones. Your land and buildings, vehicles, and machinery. Yes, it's the last one. Those are all your non-current assets. Your current assets, we're going to look at your inventory, your consumables, your bank. We're going to look at your accounts receivable, and I think those are the most important items that you're going to look at. Your expenses, your expenditures. You're going to look at your depreciation, bad debts, provision for bad debts. You're going to look at your tax, your interest expense, cost of sales, trading stock deficit, your incomes. You're going to look at your sales, obviously. Your sales, your accrued income. You're going to look at your interest income. You're going to look at your rent income. You're going to look at your trading stock surplus, discount received. We also have your discount allowed. Thereafter, we move on to your non-current liabilities. What non-current liabilities are you going to look at? It's your loans, it is your prepaid, it is your accrued expense, it's your tax payable, your income received in advance. These are current liabilities. Income received in advance, your tax payable. So I'm going to remove them from here. I'm not supposed to be on this side. Your accrued expense. Here it's your loan, it's your mortgage. It's your mortgage bond. And yes, those are the most important accounts that you are going to be looking at throughout the whole year. Now we will go into where each of these, I think it's also easy to be outlined here. You can group them like that, group these together, and group those together. Which statement outlines your assets mostly? It usually is your statement of financial position or your balance sheet. Your balance sheet. Which statement usually details your expenditures and your incomes? It is your statement of profit or loss. Which statement usually shows your liabilities? It's the same. It's your statement of financial performance. But we will go into them right now. We will also do an example of the accounting equation because it is still important even in your matric state. Now we're going to look at your statements. Can you name them quickly? There is 4 major statements that you need to know. It is your statement of your statement of profit or loss. Let me just use your terms that you usually know. It is your balance. Okay, let me just take them according to how they start. It is your statement of changes in equity. It is your balance sheet. Thereafter, it is your cash flow statement. What does your statement of profit or loss do? It compares, it's your incomes versus your expenses. It shows what? Shows your profitability. Statement of changes in equity. It is your owner's equity essential. What does it show, or what does it symbolize? It symbolizes your shareholding. We have your balance sheet, which is your assets, which is your accounting equation. Which symbolizes your performance. We have your cash flow statement. It deals with real cash, in or outflows. What does it show? It shows cash on hand. We are also going to go into detail of each and every statement that is written here. Do examples, questions, and answers. Next up, we're gonna look at which is the last thing we're gonna do for today, your general ledger accounts. Do you think you can name them for me? There's 7 important general ledger accounts that you're gonna be exposed to throughout the whole year. General ledger accounts, we're looking at your ordinary share capital. We're looking at your SARS income tax. We're looking at your shareholders for dividends. We are looking at your income tax. We are looking at your appropriation. Account. We are looking at your trading account. We will be looking at your profit or loss account. These accounts are going to be vital for you throughout the whole year. Now, we need to state, of these 6 accounts, which ones are your final accounts? If you said these 3, you are correct. These are your final accounts. These are classified as final ledger accounts. And for today, you can just go ahead, go into detail on your own, look at all of these accounts, look at all of the statements that we went through, look at the accounting equation. There's 3 big stuff that we did today. And you can just look at examples, you can look at how the statement is structured before we actually get into examples and questions in the upcoming session that we're going to have. But for today, for now, this is all for me. I hope you enjoyed the session. Bye-bye.